We need your support. Click the like buttons below. Now onto the video. Welcome to readtheticker.com. Today we're going to talk about how Jesse Livermore's method of trading is relevant today. Source of reference is the famous book Reminiscence of a Stock Operator, and we're going to use reference to the jesse-livermore.com website. We're going to talk about what he learned, how he traded. This is a man who made fortunes and lost them several times over, and in the end the game came down to a regular approach. This is a book about the life of being a trader or an investor, an honest account. In the end, after lots of years of trial and error, Jesse Livermore settled on what he called the pivot point method. He would look for trading opportunities when the price retested a previous low or high. Thus a double bottom, double top, triple bottom, triple top, A-year base. He would look for action around this level. He'd be looking for a breakdown or a break up. Now obviously we've got bull traps up here and bear traps down here, but he called this the pivot point. On considering entering into position, he wanted the market to react in a normal manner. He wanted to follow the breakout, and he wanted to act in a normal, this particular case we're going short, so it broke down in the breakout on the pivot point. This is a pivot point here, and this is a breakdown. Let me just go back one. This will be a situation where it's a short, where it's broken down, it's come back to retest. So he wanted to see a normal reaction with price and volume confirming his point of view before he would enter. This is where he found, this is the action he would consider to look at the trade, and this is how he would react once price acted in a normal manner and he started making trades. You want to see price and volume swinging in a correct manner. And as I've stated before, whenever you're having a breakout, a bear breakout or a bull breakout, you have to deal with the fact that we might be in a bull trap or a bear trap zone where there's lots of dangers of supply and demand. So it has to, the price action has to act in a normal manner, otherwise it will quickly reverse. Jesse Livermore, in his early days, day traded using price and volume. Then he wandered on to tips and inside information. Back then it was legal for a while, I believe, and then it became illegal. But finally he used macroeconomics. He became a fundamentalist and a technical trader all in one, like modern day macroeconomic traders, or what they call the macro trades. Now, Jesse Livermore once said to be successful, he required you to look at fundamentals, to study market conditions of the stock, the economy in the past, and what's expected of the future. He said one of the most important elements of being involved in the market to be successful is to have superior knowledge and obviously patience to wait till the time is correct. He suggested that you invest in strength when the market confirms your opinion is correct. Basically says down here, the only time you should buy is when you know they will go up. Now this information here came to us all via an interview with Jesse Livermore by Richard Wyckoff. This is the book here, Jesse Livermore's Methods of Trading in Stocks, for $10. One of the best books I've ever read on Jesse Livermore. And here Richard Wyckoff spent time interviewing famous traders of his time, and Jesse Livermore was one of them. Now Richard Wyckoff combined the knowledge he learnt from Richard Wyckoff and others of the time. I think Charles Dow was one of them. Lindbergh, I think it was another, and he created the Wyckoff logic. A little bit like Jesse Livermore's pivot point. We have the first point here, and then we get another point at the base, and he decides whether you go long or short. So this is looking at a triple bottom, and he wants price to act correctly. So Richard Wyckoff and Jesse Livermore have the same fundamental knowledge of price action and how it should act. Richard Wyckoff just took the thinking of Jesse Livermore and mapped it out for wider investment community to learn and apply his methodology. Now, one thing people do get confused or miss out on is thinking that Richard Wyckoff is a purely technical methodology. You should also understand that it's to do with fundamentals as well. If you believe you have good understand the fundamentals behind a stock, you should also understand its accumulation distribution is acting right to confirm the fundamentals. This is an accumulation and the same pattern for distribution. Now, like as I said before, you'd have a bear trap down here and you get bull traps up here. Main points are Jesse Livermore was both a technical and fundamental investor. Richard Wyckoff studied Jesse Livermore and others and created an educational process for all investors. Later teachers of Wyckoff logic, Bob Evans, I think the stock market institutions are still doing it, Richard Ney, Tom Williams and others, expanded this work for modern times. The stock market is not a random walk. There are true patterns of accumulation and distribution. The market is populated with the phases and swings of demand and supply action clearly shown on the chart. There is no other market logic which highlights the demand and supply in the market as well. If you want to learn more, just go to the readtheticker.com and click information FAQ and do a bit of searching on that menu. Or go to the mobile site, readtheticker.mobi, and just go to the information page. Thanks for watching.